Hello, everybody. My name's Tony Cardenas. This is the Indy Real Estate Market Weekly Update. Today, I'm sitting here with Kyle Morse with FC Tucker and Shelly Walters with EXP. Hey, guys, how's it going?
It's going well.
Hey, Tony.
Yeah, it's just good to be back. I heard it was hot while I was gone.
Well, yeah, but you were in the hottest place in the United States. You were out there in Hawaii.
It was like 85, 87 every day. I heard it was like 107.
Yes.
How many days were you there?
11 days.
And did you relax enough to come back and work your butt off here in the real estate market?
I mean, as much as an agent can, even on vacation, you're not really on vacation. So doing inspection responses, but looking at an island and an ocean is pretty good. So.
Yeah, I know. I had to get a hold of you a couple times on a few deals. And Shelly, you've been busy in the last week because I know we did the podcast last week, but I tried to call you 2 or 3 different times, and you got to get back to me because you've been with buyers and sellers. So what's going on in the market in your world?
Well, I'll tell you, we're just still seeing that days on market are continually increasing a little bit on these listings, and we're getting a lot more actives going on the market.
So, Kyle, I know you pay attention to the market even though you're on vacation. What are you seeing right now in the Hamilton County and Indy market yourself?
So, I mean, just like what Shelly said, houses are sitting on the market a little bit longer. Pricing matters now more than ever. Seeing price reductions, you know, I think we're just get back to what we always talk about is education. You know, I think people are now scared because they're seeing a pivot in the market, which is a little concerning, quite honestly, just because it's still the best time to sell. You just got to go into it with reasonable expectations of what you're going to get. The value of your home is the highest it's ever going to be, or it has been at least historically. And at the same time, like, okay, so maybe you're not getting some houses will still get competitive offers, but not all of them. But let's say you end up, inspections are coming back really, really heavy as far as concessions and things like that. And so maybe you lose $3,000 or $5,000 or $1,000 or who knows, whatever it may be. Even at the end of that day, you're still at the most you could ever get for your house historically.
Right. And we're just not trying to say it's a doomsday market.
No.
Not at all.
It's just a pivoting market that's just changing a little bit. We're still in the heat of the summer market, and there are a lot more actives, but they're still selling just days on market. And if we look back, 2 years ago, if we would say days on market were 13 to 20, we'd be so excited. I mean, those are still great numbers.
Where are we at on days on market right now in Carmel, Indiana?
Well, for Carmel right now, the average day on market for the past 7 days of the homes that did pin were 13. So,
okay.
We were looking at 4 and 5 about 2 months ago, 3 months ago. So that's just where we're seeing now. That's not bad.
But think like 4 years ago,
Yeah.
and you told somebody even 30 days, they'd be like, sweet, let's do it, know?
Yeah.
And even now, like people just, I know people acclimate to the market, right? And the market is changing and people haven't acclimated yet to what a reasonable expectation is, but it's still an amazing time to sell.
It's still a seller's market. And, I had a conversation a couple of days ago with my new listing coming up here in Carmel. And, I was just talking to them about the way we price a house today. We still need to be very, very careful, even probably a little bit more than we were doing 2 or 3 months ago, because there is no guarantee of escalation. There is no guarantee of multiple offers. And you need to price it as you would if you look at everything, including price per square foot, looking at everything in regards to how the other houses that have sold, and try and come up with that list price. If anybody's looking at the sale price, on my particular one, it was a $379 list price versus a $404 sales price. Those were the averages I was looking at for that specific house. So that is a huge difference, a $25,000 difference in what if somebody would want to sell or actually list at the sale price. They're going to hurt the seller. And so just looking at the Carmel stats, 28 homes in the past week had a price drop.
Yep.
That's a lot. And that shows that
Now,
people
wait a
are
minute.
not
Where
pricing.
was that 28 at? Carmel or
Carmel.
Hamilton?
Just Carmel.
28 homes had a price drop, right?
On the current active listing. So right now we have 123 houses active in Carmel. 28 had a price drop. So we're looking at a little under, 20% are having price drops. People really need to make sure when they list their house that they're pricing them correctly, because with price drops, that means you're sitting on the market too long. And the interesting thing about that was the 7-day sales of average days on market, the past 7 days was 13. But the ones that have had price drops, still not sold, their average days on market are already 28. So if you hit your price wrong in the very beginning, you're going to lose money.
Yep, 100%.
So does that say that the agent went in there a little too aggressive on the price, or he was right on the price and the market changed in the last week to 10 days? Where where is the happy medium right here?
I mean, there's a lot of details that go into that, quite honestly. I mean, it can be that. It can be somebody who, we kind of say buys a listing, right? Like they'll list it at whatever. At the end of the day, like I have to educate my seller, but I'm going to list it for what they want to list it for once we are educated about what the price point is, so it could be on the seller. It could be on, the professional. Like there's a lot of variables. It could just be something as simple as, where they're at on what they own the house, right? Like there's just way too many things that go into that. To be like, I have a broad stroke opinion on it, but I would say it starts with education for sure. Even if you're like that tight on equity, should we be selling unless we absolutely have to be, right? So there's just a lot of that. So.
Well, and the market never is determined by what the seller thinks they want out of their house or what they need out of their house. The market will be dictated by what the buyers will pay.
Yep.
So when a house sits on the market for too long and the price has to continually be dropped to find the correct market, you're usually looking at buyers who will then lowball that house and or at least not pay list price. So wherever you get to a price where the market's going to accept it, there's a potential that the buyer still won't even pay that list price because it's been on the market too long.
Right, but a lot of homeowners today that want to sell their home, think that they can still get these astronomical, aggressive prices out of their home. And I think a lot of that has just disappeared in most cases right now.
I would say that number is already the listing price compared to where we've historically been. It's just that extra. But I will say, because that's toned down a little bit, I haven't seen a problem with appraisal in a while, because we're going over on some of them still, but not as astronomical.
Exactly.
And that's reassuring too, that I'm not seeing issues with appraisal lately, at least on personally. So
well, and that's also looking at when you're looking at comps for a house when you're getting ready to
pricing
list
it correctly. Right?
Pricing it correctly. Again, we can say that over and over again. But we don't know if we look back 6 months, which you try to go back no more than 6 months in this market, whether or not those houses even appraised.
Yep.
So if we're looking at some astronomical price over list price compared to...
You don't know what was guaranteed, all of that.
Yeah, so that's why I still keep saying what the list price is where you need to see when you're trying to price a house, not the sale price, because the sale price could be basically incorrect. It's just an inflated number that never even was agreed to by the market, you'd say, if we're looking at appraisal numbers.
Exactly. So tell me, go over Carmel again, and then let's run down the list that what you have.
Okay, so in Carmel, we currently have 123 active today. 54 went active in the past 7 days.
Okay.
So that's, not as high as we have had, but 25 of them pended, so 50% of them pended.
Okay, and how many price drops?
We had 28 price drops.
Okay, next.
And then back on market were 2.
Oh, wow.
So the Westfield, we currently have 144 active homes on Westfield. 40 of them went on the market in the past 7 days. Only 14 pended of those 40. So that's quite a few that are still active. And then on that back on market were 7, and also 21 had price drops of those houses. So the average day on market for the past 7 days for Westfield was 8. And then in Zionsville, we have 44 active in Zionsville. So Zionsville is starting to tick up in their inventory. 14 went on the market last week. 8 of those sold. 10 had price drops. And in Zionsville, the average day on market of the 10 who price dropped was 30. So these days on market are getting higher for these homes that are priced incorrectly.
Okay. And is that your list right there?
Mm-hmm.
One question again. Tell me again how many price drops in Zionsville?
Zionsville had 10 price drops.
Wow. Okay. Kyle, let's move over to you in your area.
So in Fishers, we had 56 go on the market in the last week, anywhere from 220 to 3.1, basically 3.2 million. 35 of them are still active, so 21 of them pended. So over 50% of them are still active.
Okay.
Average days on market is 10, but I mean that's the average. I saw as high as 48. I see stuff as low as 1. In Fishers in particular, there's a new Fishers neighborhood that's got a lot of new construction that went on the market that's adding.
What is
to
that
those
neighborhood?
active? Piper Glen.
Okay.
Piper Glen. They had like 7 or 8 on there when I was looking at it that they had just put on the market. So,
And those are actives that aren't existing yet.
right. Those will be completed in 9 to 10 months, right?
Okay.
So, but that's just the week that they actually put them on the market. So, so like I said, so average days on market is 10, but I have a wide variance there. I have 1 to 48 days, right? But there's 148 total active on the market. So when we were looking at the numbers, 2 weeks ago in Fishers, I had 100 total on the market. So that's almost a 50% uptick in 2 weeks, right? So that's pretty significant. That we're seeing things stay on the that the inventory is really kind of building up, and which is what we need to get more to a healthy market. I just think, like I said, it goes back to reasonable expectations at this point. And then in Noblesville, we had 42 go on the market last week, anywhere from 184 to 1.9 million. 20 of those are still active, so more pended than actually are still on the market. There's 22 pended and 20 are still active, but 111 are total on the market, and that was 87 2 weeks ago.
Let me ask you this. What was Noblesville 2 weeks ago?
87.
Okay.
Total on the market, yep.
All right. And what else you got? Is that it?
That's it. But one of the things about that, too, is, historically, 4th of July week is not a very busy week, right? So a lot of that is stuff that was kind of 2 weeks ago and is still on there. And then, we've got stuff hitting on the market. But to Shelly's point, you're either going to be the person who sells in the weekend, or I just see a lot of stuff that people aren't even looking at it till it's 4 days on the market. So they're looking on Tuesdays to make sure that they're not the ones who are in that competitive bid situation, right? So, and I see a lot more selling in the 4 to 10 day range because buyers are becoming more educated, they're becoming more patient, and they're not putting themselves in that situation, right? And so then they're buying it when they're only up against 1 or 2 offers, and they have a little bit more buying power. But to Shelly's point with listing price, we were competitive on one 2 weeks ago, and when I ran the comps, it was significantly underpriced. It was like $20,000 underpriced. So, but they made that up because we had competitive bid situation.
Right. Well, the other side of the fence is for the buyers out here looking to buy a home. They got some inventory to look at now.
Yes, they do.
If you look at 6 months ago or a year ago, it was a whole different story. And it did take a lot of buyers out of the market because they couldn't find something to buy.
Well, and they've got time now to stop and think about it. The thing about with the buyers, too, is they're able to come in and look at a house, and the rules, I always call it the rules, the seller's rules of what they're saying. I am not seeing as many hit the market and say offers are due by.
Yeah.
There's not a lot of times where they're putting on deadlines on offers anymore. Because we just don't know if that's going to happen. Realtor.com, it was an interesting stat that they just put out that the total active inventory is 29% higher than it was a year ago.
Like Kyle just said, and you said last week, we're getting into a healthier market for people to have some choices out here, even with the interest rates being up. I think I'd rather pay a higher interest rate today versus paying $50,000 to $60,000 to $80,000 over on a house with a lower interest rate. At least I know where I'm buying my house and my market at. Even with the rates being higher today, I know when the rates come down, I can always adjust my rate later.
Well, I always talk to my buyers about that. If you take that 50, 60K, and let's say you're 500 more on a monthly payment, right?
Sure.
Or let's say you're 1,000 more on a monthly payment, which is with what they've gone up, that's not realistic, right? But maybe from December, right? But that's about it. That 50K carries you like 10 years,
right?
Liquid,
or longer,
or longer, right? So I agree with you on that point. I'd rather have a slightly higher rate. Now then you start getting into debt to income and all that stuff.
Right.
But versus losing that 50, 60K,
right?
Just to buy the house because
just to
you
buy
had
the
to
house.
compete against somebody else who wanted it as well. And I mean, like we talked about with those appraisals not coming in. I mean, if you literally just got told that you bought a house that wasn't worth $50,000, for more than what you paid, I'd rather pay a higher interest rate.
Of course
and
you
pay
would.
what the house is appraised for.
Because you can always adjust your rate. You can get creative with your rates. You can move it over to an ARM. There's a lot of options out there when it comes to refinancing. And some of these people that did buy over market, if they try to refinance in a year or two, they might not get the appraisal that they need, and or get the home equity that they need to maybe do something in the future with their home.
But generally, like historically, you wouldn't do that anyways, right? Like refi in 2 years, right? We generally are looking at like 5, something like that, right? So, but I think that
we have people right now giving up 2.75% interest rates. Now, I'm not saying everybody. You're right. It's not the norm. We got people getting rid of 2.75% interest rates to refinance to 5.5%. And I'll tell you what they're doing. They're paying off their first and their seconds, and they're consolidating because they're getting concerned about what the economy and the market's going to do. You're right. It's not the norm. Some people are giving it up, and then some of them will say, "Hey, look, this interest rate I got on my house is so good. I'm going to stay here for the next 10 or 15 years."
Yep.
And those are your long-term buyers. And homeowners, what's the average person that stays in their home here in the Midwest? Is it 6 years?
It's like 7.
Oh, yeah, I think 7 is what we normally hear.
Right. I agree with what you're saying, Kyle, but at the end of the day, you're going to have some people flip around on their mortgages a little bit. But then again, if I'm out here buying a house today, I want to buy in this market. I really do, because I got several choices. I don't have to make a decision in 24 hours. I can say, hey, let's wait until next weekend, and then I might have another 20 or 30 houses to look at in the area that I'm interested in. So,
well, to your point too, so let's say you did buy 2 years ago and you have a really low rate,
right?
But you got $100K in equity all of a sudden,
right?
Kids
do right
going
now.
to school, whatever it may be,
absolutely.
So things absolutely do come up.
Right.
And I think those tend to be people who are educated and I don't want to say it like that, who've been in, not even the industry. They've bought and sold enough homes to know that these are still low rates.
Yeah, they are. The rates aren't bad right now. But let me ask you this: what are you seeing when you guys are getting calls for people to buy homes? They're not frantic like they were 6 months ago. I got to get a home. I got to get a home. Some people are just coming in here buying homes because they had to have something like right now. Are you seeing your prospect, your buyer, a little bit more relaxed in this market?
100%. But I think we've been setting that tone for months. At least I have been. Right. But I would also say...
But on the seller side, I think it's a little bit different.
It's starting to get better, but I would agree with that. But it depends on where they're buying. That 200 to 300 range is still really hard right now because you're still competing.
But if we're talking about 300 to 500,
investors.
That's still
you're good.
Yeah.
I mean, you can take your time and you can pick. The only thing that would dictate your timeline is, how far in advance you actually started looking.
I think you get a lot more choices in, for example, Fishers than you do in Carmel for 4.
Or Zionsville. Zionsville is like 7, 10.
Yeah, no, but I'm talking in a 400 or 500, 550 market. You have several more choices to look at inventory, take your time, and probably see a lot more come on the market in Fishers that you would in Carmel. What do you think? Do people get those options in Westfield? How's the Westfield market again? How many homes do we have?
They have active currently 144. Westfield.
There's a lot of inventory up there.
Yeah, very strong. They still have a lot more new builds than we do in Carmel. So if you're looking for new builds, many people will move towards the Westfield market or the Fishers market as compared to Carmel. There's just not as much to choose.
Exactly. And in the next couple of weeks, I'm going to dig into the construction world. I'm talking about what people are buying. I'm not talking about the crazy market, but I'm talking about the 4s. The 350s, very few, but the 4s, the 450s, the 550s, and the 6s. That market is changing right now. I'm getting notifications all the time, and I do believe that you're going to see the builders get creative.
They are already. I've seen builders offering things out. I've seen them offering to buy. I think I talked about it 2 weeks ago. Buying down rates 2 points. Right. Like they are. I think. They have their pulse on the market pretty well, and I think they've been pretty adjusting with the curve, maybe a week or two early to a certain extent.
But I think
you're still dealing with delays. I will say. We've got some going on.
I also want to say, please use a real estate agent when you're building.
Absolutely. Get the guidance. It doesn't cost you anything.
No.
There's just things that happen that if you don't have somebody who's in the business and understands what's supposed to happen and should be happening.
And plus, it actually helps the builder. It lets you walk them through the process.
It takes a little bit of heat off the builder from having to do all the hand-holding and explaining. But I will tell you, I'm dealing with an issue right now with the builder, a very good, reputable builder. We were told that we did our inspections. You should always inspect your properties. If they're being built, they need it. So we did our first inspection at foundation and found a major issue with the foundation. They told us that it passed the city. I called the city. It did not pass. So I'm here to protect my clients. And if you don't know what you're looking for, this is a foundation issue.
Well,
so I'm not saying this happens all the time, but get an agent if you're going to do it.
Absolutely. That's what makes you guys have so much value. Look, what buyers don't understand when they're buying a new home, that there is XYZ percentage already built in that home. Case if you walk in with a real estate agent, and I remember Kyle saying and you saying, hey, they'll do some walkthroughs, they'll follow through, dot the I's and cross the T's, and they go, oh my God, I didn't even know this. Okay, and that's a real good thing that you brought up today, Shelley, because if you are buying a new home, call a realtor, preferably Shelley Walters, Kyle Morris, Justin Griffith, Greg Cooper. Get a hold of these people and say, look, I'm thinking about buying XYZ. What's your opinion? And you can also tell them maybe about another area that they don't even know about, or there's something that there's an aggressive pricing out there on something that they may not know.
There's also the new build. They don't have all that inventory out there online. We're talking about all these new actives.
Yeah.
So we do have knowledge of inventory that's not even out there.
Yeah, I have reps hit me up all the time and tell me what's coming on the market in 2 weeks, 3 weeks.
Yeah, they weren't doing that a while back.
No, actually, mine do. Just because I spend a lot of time building relationships with people, right? And so
I get it.
I mean, especially last year when we had really tight inventory, we were very blessed to be able to get quite a few people into spec homes way before they even hit the market, right?
Right,
so,
and if you know about it, they won't hit the market. So we're the ones
Yep.
that are pulling them off the market before they even hit, because we're getting our clients into them. And then again, it's not a competitive offer. It's,
Right.
Yeah,
it's
you
what
know
the list
exactly what
price
you're paying
is.
for the
Yeah.
house.
Okay, well, we gave everybody a lot of good information to think about this week. My number one message is, if you're a buyer out there or a seller, always use a professional agent to walk you through one of the most and biggest processes you're ever going to do in your life, okay? People don't understand how difficult it is to sell a home, all right? Shelley, what would you tell a buyer today that's going to go out here in the Carmel Westfield market that they need to know? I mean, besides being pre-approved, and they're still not all pre-approved when they get a hold of you, but they got to be pre-approved. The second thing is, what would be the next thing you would tell a buyer to do?
Well, we do always make sure that they're pre-approved, and we get them, people that we think that we can work with, like you,
Right.
And make sure that they have
With my company. I'm not a loan officer,
Right.
but you're right, with my company.
But what the thing about that is they need to know and understand what they are comfortable with, because I always say, a lender may tell you that you can afford, $4,000 a month, but you know that $2,000 is where you need to be.
Exactly.
Well, we need to adjust that to the purchase price. So when they come in, and another thing is they say, well, we really think we want to look between 3 and 5. And I'm like, how did you come up with that number? So pre-approval is huge in so many reasons.
And a current pre-approval is huge today. With the
Right.
interest rates going up, people have got them 6 months and 90 days old. Let me tell you something, the rates are different.
Yeah, and like they change daily and weekly, and so as a list agent, we're very, very diligent on making sure that the pre-approvals that we get are, I call the lender. As soon as I get an offer, if they're going to be our buyer, I call the lender and ask them, where are we today with this buyer?
Update the pre-approval,
But
with the address.
If it's even a week old in today's market, I'm not quite sure. So, just call. And this is where we protect our sellers and make sure that we have a deal that's not going to fall through. And as a buyer's agent, we do the same thing. We want to make sure that they're updated so that we're not looking at the wrong houses, making offers on houses that are not going to
Absolutely.
go through.
Well, let me tell you this. There's a huge difference between a bank, a mortgage lender, and a mortgage broker, and we're going to talk more about that next week. There's 3 different rates right there on the same amount of money. So you got to be aware of what you're getting and what you're being charged. Right now, don't pay points, and people are paying points right now, and it's not a good thing. Kyle, if you were going to tell somebody, or you were going to discuss about somebody wanting to list their home, what do they need to know about this market right now?
I mean, it's reasonable expectations of how long it's going to take, what the process is going to look like, not to panic. Don't pay attention to the media and don't pay attention to your friends, quite honestly, because their information is probably, unless they listen to this podcast, probably 60 to 90 days old. I would say minimum, right? Especially like with the media cycle, unless you get, and even then, we see those statistics, and I've had people shoot me statistics before, and they're like, oh, the market, this was like back in March, and like, oh, the market is changing, less people are buying houses. And I was like, no, there's less houses to buy. It's how you got to know the information you're actually digesting, because the statistic can look a certain way if you don't really know what you're kind of digesting. As far as that, you got price right, so you can actually get people in there. And then you just also have to, we got to make sure the house is going to be good on inspection, because, inspections have come back as leverage for sure.
Have the house pressed and ready.
Yeah. I mean, there's just a lot. It's basically going back to what you would have expected if you would have sold 3 or 4 years ago, right? But that has been more of a thing than you would think it is, because people fell so in love with the last 2 years of the market. If you were a seller, that I would say right now sellers are having more problems adjusting to the market than buyers are.
Okay. Kyle, what company are you with?
I'm with FC Tucker. You got Morris Property Group.
Telephone number. How can they get a hold of you, Kyle Morris?
317-649-5122.
Shelly, how can they get a hold of you? What's the name of your company?
We're with EXP Shelley Walters Realty Group. You can reach me on my cell phone, 317-201-2601. Have a great day and a great week.
Thank you, everybody. We'll talk to you next week, or we'll talk at you next week. Thank you.
Hey everyone, Holly here. Thanks for listening to the Indianapolis Real Estate Market weekly update. Need a professional real estate agent? Reach out to one of our realtors on the podcast. Shelley Walters with eXp Realty, Greg Cooper with Compass Real Estate, Kyle Morris with FC Tucker, and Justin Griffith with Keller Williams. This podcast is sponsored by America's Best Mortgage by PRMG, 317-214-6720, and executiveportfolio.com, the #1 real estate magazine in Greater Indianapolis.